Hello and welcome to this video. In this video, we are going to look at 7110 GCE O-Levels paper, which is a principle of accounts, and we are going to look at paper 1 variant 2 of May, June 2010. In this video, we are going to solve for all the multiple choice questions. So generally speaking, you see 30 multiple choice. So let's begin with problem 1 or multiple choice number 1, which is very basic, fact-based, and you should immediately get the answer like maybe in 2 seconds or 3 seconds. It shouldn't take more than 5 seconds, I would say. This question basically asks you what is the accounting equation. So this is our keyword as well, accounting equation. We all know that our accounting equation is assets equal to liabilities plus equity. You're going to have different versions of it. So you would have to see, okay, go through the multiple choice options. So asset plus liabilities equals to capital. This is absolutely wrong. Asset minus liabilities equals to capital. Yeah, if you rearrange this equation, that is true. So most likely B is our option, but we will go through C and D's just to make sure that B is the correct option. So capital plus assets, again, this is wrong. And then capital minus assets equals liabilities. This is wrong as well. Hence, our answer to this question, multiple choice number 1 is answer B. Multiple choice number 2. Zafar returns goods bought on credit from Khalid. So how is this recorded in Zafar's book? So we need to understand what is happening in this very small scenario. So Zafar returns goods bought on credit from Khalid. So Khalid is basically accounts payable in Zafar's book, because Zafar has bought goods from Khalid and Zafar needs to pay Khalid, but Zafar returned some goods to Khalid. So what would happen? Very natural. Our accounts payable should go down. Our accounts payable for this should go down because Zafar returned some goods, right? So accounts payable should go down. And our inventory also should go down, or let's say purchase returns. So we would look for a similar option. So account to be debited, yeah, accounts payable have, since it's a liability, it would have credit balance. But if to reduce liability or accounts payable, you basically debit. So account to be debited, Khalid would be debited. So C and D are absolutely wrong in this case. Now we have a 50-50 choice here, A and B. Sales return doesn't make sense because Khalid sold goods, and the question is asking the entry in Zafar's book. For Zafar, this is a purchase. So option A is the correct answer. Account to be debited Khalid and account to be credited purchase return. I have the reasons here, so you can always read these reasons if you would like to. Multiple choice number 3, which is recorded in the sales ledger. So this is the key term sales ledger. You should know what items are included in sales ledger, right? So you should know that. So we would go through the option cash sales. Okay, you can keep this in mind. Check paid to a creditor. Now this is a creditor. This has nothing to do with sales, So you immediately cross this option out. This is incorrect. Check received from a debtor. Yeah, this is a more good option, because multiple choice questions are always choosing the best option. Sometimes they are fact-based, but most of the times you would see it's choosing the best options, and that's why they are tricky. So option number D, moving on to option number D, it says sale of fixed assets. Now this has nothing to do with sales ledger, nothing to do with sales ledger. So option A and option C, cash sales are already, so entry for cash sales, if you look at entry for cash sales, this does not generate any debtor. This does not generate any accounts receivable. So option C in this case is the most likely correct option. Check received from a debtor would be recorded in the sales ledger. Hence option C. Multiple choice number 4. Which document does a trader send to a credit customer, credit customer, to summarize the transaction for the month. So which statement or which document a trader would send to its credit customer? A credit note? No, that's not true. A debit note? That is again not true, because these two notes are sent once you have bought the goods. Receipt? No, that is entirely another document. So these are all some nonsensical options, I would say. Hence, the answer to this question immediately, because A, B, C are absolutely wrong, and that's why it's D, statement of account. Statement of account summarizes all the transactions. A very common example that I would like to mention here is your bank statement. Your parents receive a bank statement. A bank statement basically summarizes all the financial transactions, and that is similar to statement of account. Statement of account summarizes all the transactions. A very easy question, nothing really difficult here. Multiple choice number 5. On 1st April, the bank column in Mariam's cash book, bank debit balance of 150, which means that it is a positive balance. What was the bank balance on 1st May? So within a month or within a year, because they haven't mentioned the year, let's say it's within a month, 1st April to 1st May, you need to calculate the bank balance on 1st May. So you had a debit balance of 150. You received or deposited sales of 4,210. So that is an addition, because you received that money. Dividends banked, you received some dividend. That is again an additional cash, plus 180. And check paid to supplier. Now this is outflow. So this would be negative 3270. So you would do the math here, and you should arrive at 1270. Since this is a positive number and bank is an asset, which have a debit balance. So you would look for the option that's answer D, 1270, debit. Multiple choice number 6. Which is entered in a business's general journal. So this is talking about journal entries, and journal entries is the very first or the starting point of any new transaction or any financial transaction in the business. So we would go through these options A, B, C, and D, and look through which one is a journal entry and which one is not a journal entry. Purchase of a new motor vehicle on credit, that sounds more like a good option, because it is a purchase of new motor vehicle. It was never recorded in the business. It would have never been recorded in the business journal. So probably option A might be the right, but we will go through option B, C, and D as well. Return of faulty goods by a credit customer. Now this is not a new transaction. There would be a preceding transaction to this. So this is 50-50. This is 50-50, not really a very convincing answer. Option C, standing order for payment of insurance premium. Now this is not a transaction. This is not a transaction at all. This is a standing order or notice. Let's say it's a notice from your insurance agent telling you that you need to pay your insurance premium. So this has nothing to do with journal. So option C, that is not the correct option. Transfer of surplus office cash into the bank. Not really. This is just a transfer. You already have this cash already recorded, probably already recorded. You are just transferring. So it's not option C and D. Option B again, as I say, it would have a preceding transaction already done. It would be adjustment. This would be adjustment to previous transaction. So therefore, it's option A. Option A is the correct answer. Purchase of a new motor vehicle on credit. You can read the reason here. This is just for your reference, and to make following easier. Multiple choice 7. A trader prepares a ledger account. So there's a trader who prepares a ledger account using the running balance method, using the running balance method. Now you need to understand what running balance method is, right? That is a very key term here, and it's asking for you which statement is correct. Running balance method is basically the totals are being calculated after each and every transaction. That's what running balance method means. So the balance is shown after each transaction. Yeah, it matches the description, but again, we will go through option B, C, and D because we need to choose the best option. The balance is shown only at the end of the month. No, that is absolutely false. This is a false statement. There are fewer calculations than in a traditional T account. Irrelevant. This is irrelevant and false. This method is not suitable for computerized accounts. Again, this is actually more suitable for running balance method. More suitable for running balance method because computing power is tremendously strong these days. So it could do quick calculations. So B, C, and D are wrong. Option A is the correct. The balance is shown after each transaction. It matches the definition of running balance method. So option A is the correct answer. Multiple choice number 8. On 1st March, a business owed, so we read this problem on 1st March, a business owed its supplier 9,500. So this would be a credit balance because business owed to its supplier 9,500, meaning that the business needs to pay their suppliers 9,500. During March, the following transactions took place. Goods purchased on credit, $10,000. Goods returned to suppliers, $200. Checks paid to suppliers, $8,900, and cash discount received, $100. Okay, so if we do a T account, or you can always look at this calculation as well. It's more or less the same. So 9,500 is my credit balance because I owed this much money to supplier at the beginning, and it's asking for me the ending balance at the end at 31st March. So 9,500. Then I purchased an additional goods, so 10,000 here on the credit side. Then some of the goods were returned to supplier, which means that my accounts payable has been reduced by $200. Checks paid to suppliers, so I paid 8,900, which is again a reduction in my accounts payable. Cash discount received, $100. Again, that reduces my payable. So if you do the math here, you would get a credit you would get a balance here which would be of 10,300, and it would be brought forward BD for 10,000 on 1st April, because it's asking 31st March. So 31st March you would have 10,300. So your option here, your correct answer is answer C, 10,300. Multiple choice number 9. Which is a compensating error? So there are different types of trial balance errors like commission error, omission error, and there are a couple of them. The important thing here, I would assume, is that you know the definitions of these errors. If you don't know the definition of these errors, you must read these definitions because this video is all about how to solve these problems by using educated guess or the limited information that you might have, because I understand you may not be able to study everything for the exam. So that's when educated guess will help you, and eliminating out the options will help you. So this video is more about how to solve the problems or the multiple choice, and give you tips on how to solve problems. So if you don't know what compensating error is, I have the definition here, but you should read you should read on trial balance errors. You should read on trial balance errors. Right, so which is a compensating error? Check received from J. Wilson debited to account of J. Wilson. Now they just debited to a wrong account. So this does not meet the definition of compensating error. A compensating error is when you make the same accounting error and it sets off, which means that it would have zero effect. It would have no effect on the balancing. The transactions and everything would absolutely balance, and that is why it's also a hard error. It's a very difficult error to spot. So drawings debited to cash account and credit to the drawings account. No, again, this does not meet the definition. Purchase of motor vehicle on credit debited to the motor expense account. This also does not meet the definition. Sales account and purchases account both undercast by same amount. Yeah, now this sounds very appropriate. So sales account and purchase accounts, both of them have been, so both these accounts have been undercasted by the same amount. So basically, no effect on overall balancing. So option D is the correct answer here. Multiple choice number 10. On 1st January 2009, there was a credit balance. There was a credit balance on the wages account of 2000, which means that there was a wages payable of $2,000. Wages paid during the year amounted to 48,000. That was your expense, or you paid what you paid during 2009. On 31st December 2009, wages totaling 3,500 remain unpaid. So this is your opening payable. This is your opening payable for wages, and this is your closing payable for wages. This is your closing payable for wages, and this is what you paid during the year, 48,000. How much should be transferred from wages account to the income statement profit and loss at the end of 31st December? So what it is basically asking me is wages expense for income statement of 31st December 2009. So I need to calculate wages statement. It's very simple. You just need to look at the difference between opening and closing payable. So your opening was 2,000. That's what you owed in the opening, and then at the end you owed 3,500. So there has been an increase in the payable of 1,500. So you owed 1,500 of $1,500 of wages payable to your employees. And during the year you paid 48,000 as well. So 48,000 plus 1,500. Because we follow accrual accounting, we have to add $1,500 because this is expense. This is wages expense for the year 2009. So 48,000 plus 1,500 gives you 49,500, and therefore option C is the correct answer. Multiple choice number 11. So just by looking at this problem, you can immediately guess it that this is testing a provision for doubtful debts or allowance for doubtful debts. But you need to read the question very carefully. Examiners like to make questions tricky. So it's all about understanding the trick here and the question as well. Rashid maintains a provision for doubtful debts at 5%. So their rate of doubtful debts or the provision or the allowance is 5% of paid receivables debtors. This could be equally accounts receivable as well at the end of each year. Paid receivables debtor owed 40,000 on 31st December 2008. So this statement basically means that at the end of 2008, I had accounts receivable or trade receivables of $40,000. Then at the year end of 2009, I had $46,000 of trade receivables or debtors. Which journal entry should Rashid make on 31st December 2009? So now you need to understand, or you need to calculate the provision for doubtful debt entry for 2009. So we will do the math in here. The trade receivables at the year end 2008 was 40,000. 40,000 times 5%, which is given in the question. My provision for doubtful debts for the year 2008 should be 2,000. Then I would recalculate this provision of doubtful debts in 2009, which would be 2009 debtors and the rate. So 46,000 times 5%, and that gives me 2,300. In 2008, I would already have an entry of debit income statement and credit allowance or provision for 2000, assuming that that's when the company started to make provision. So this is for 2008, but the question is asking me to make the entry for 2009. In 2009, my provision now has increased from 2,000 to 2,300. So you just need to pass the entry for the increment, the difference here, and the difference is $300. So sometimes student might choose this option, but that would be wrong. Because you have already made the provision for $2,000. Now in 2009, you expect $2,300 to be or expected to be uncollectible, and there's only increase of $300. So your entry would be or your answer would be A, income statement debit $300 and provision for doubtful debts $300. This is because this is an expense item, a provision for doubtful debts, and there is an increase. So hence debit income statement and the reduction in accounts receivable. And how you do that is through allowance account or provision for doubtful debts. So debit income statement and credit provision for doubtful debts by $300. Multiple choice number 12. A taxi firm received $500 from passengers. The firm sold a vehicle for $5,000. How should these receipts be treated? So there are two types of receipts: capital receipts and revenue receipts. Revenue receipts are those receipts which are coming from your general business operation, from day-to-day business operations. So this is a taxi business, right? This is a taxi firm, and they received $500 from passengers. So this is clearly revenue. And then capital receipts are basically coming from long-term assets or fixed assets, let's say. And in this case, the firm sold a vehicle for $5,000, which is basically a capital receipt here. So you would just look through the options. A is wrong. B, so they have inversed option. This should be here and this should be here. So this is wrong. Option C, yeah, that's correct. Option D is incorrect as well. So option C is your answer in here. Very easy question. Things shouldn't take more than 1 minute, I would say. Multiple choice number 13. Repairs to a motor vehicle were debited in error to a motor vehicle's account. So what is happening here? You need to understand repairs to MV, a motor vehicle, which is an expense account, the amount of this has been passed on to MV, fixed asset account. Both of them would have a debit balance as well. Expenses have debit balance and motor vehicles have credit balances. Now we look at the question, how does this affect the profit for the year, net profit and non-current fixed assets? So how does this affect the net profit and the fixed asset? For fixed assets, it's very easy. We never purchased a motor vehicle, but we debited the repairs of motor vehicle to motor vehicle fixed asset account. Now, this is basically my fixed asset account is overstated. So I would immediately look at my options, and I should be down to 50-50 now, which is either option A or option C. B and D are absolutely wrong because they say the fixed asset account is understated, and that is not the case in here. But now I need to understand what would be the effect on my net profit. So my motor vehicle repairs to motor vehicle, which is an expense, I did not record that amount in expense. That means my expenses, my expense account is understated, written here as well. My expense account is understated. Therefore, my profit, because it's asking me the effect on profit, my profit is going to be overstated, and hence it's option A, because option A tells that, because option C is understated and overstated, so that is wrong. Net profit would be overstated, and non-current assets or fixed assets would be overstated in here. So option A is the correct answer here. Multiple choice 14. The difference on trial balance was entered in a suspense account. It was later found that purchases return journal had been undercast. So what it basically means, you did not record, or you missed this transaction of purchase returns, and hence they were undercasted, and now you need to correct this error. So purchase returns undercast basically means your inventory has went down. You would be crediting purchase returns. So credit purchase returns, and your counter entry to balance this off would be debit suspense account, because that's what you are correcting. And you need to look for this option in your options list. A, no, that's not true, because that's incorrect. It does not talk about suspense at all. B, again, does not talk about suspense at all. C is wrong, because it is actually, this is not a purchase return transaction. So C is wrong. Option D is the correct option. It meets our description in here. Multiple choice 15. So a sales ledger control account showed the following. So this is sales ledger control account, and it is asking me what is the closing balance. You can have this calculation, it's again the same, but you can always draw a T account as well. So you had an opening balance of $2,000 and additional sales of $10,000, receipts from debtors $8,000, and then return inwards $100 and discount allowed $100. So you would just do the math in here, and then you would arrive at a balance of 3,700, and your answer to multiple choice 15 would be A, 3,700. Very basic. You should know the format of sales ledger control account. If you don't know, you can always look at this because that's what I did as well. So if you don't know the format of sales ledger control account, please refer to the format of sales ledger control account in your notes or books, whichever material you are using to prepare from. Multiple choice number 16. A trader's income statement, trading and profit and loss account show the gross profit and loss for the year net loss. So there was a gross profit, but had net loss. So what caused the loss for the year? You need to find the reason from these options. What would have caused the net loss? Because company had gross profit. So how do you calculate net profit or loss? Net profit or loss is basically gross profit minus expenses, right? So it could be only one thing here. You paid more. Your expenses were more than your gross profit. So you would look for which item or which option corresponds to more expenses. Cost of sales exceeding cost of sales, no. So this would affect GP, not net loss. So option A is wrong. Expenses exceeding gross profit, yeah, it sounds very correct. But we would read option C and D as well. Gross profit exceeding, no. So this is definition of net income or net profit. Sales exceeding cost of sales, again, this is definition for gross profit. So option B is the correct answer here. Multiple choice number 17. Simi had the following assets and liabilities. What was the working capital? Now, working capital is basically the difference between current assets minus current liabilities. You would look at this table, you would spot assets and liabilities and then take the difference. Inventory is an asset, trade receivable is an asset, cash is an asset, liability, trade payable is a liability, loan payable in 2021, this is a liability, but a long-term one, whereas working capital is only concerned with current liabilities as well. So we do not take this into account. Bank overdraft is a liability as well. So you would have a total of current assets here, total of current liabilities. You would take the difference, and voila, you would get this answer of 7,600. And your answer is option B, 7,600. Right? No more than 1 minute. You should not take more than 1 minute to solve this problem. If you do so, please practice. I urge you to practice. This is relatively an easy exam. Multiple choice number 18. Which group contains only trading businesses? Now you need to understand what trading businesses are. Trading businesses are basically dealing with goods. So you need to look for options which are only dealing with transfer of goods. So let's see option A. Driving school, no, this is a service business. Motor insurance agent, no, this is a service business. Motor vehicle repair, this is a service business. So option A is not the correct option. Driving school, again, service business. Motor insurance agent, service business. Petrol station, this is trading because they are selling petrol to you, but you have, so the question here asks which group contains only. So this is the keyword here. Only. So option B is incorrect as well. Option C, motor parts, a motor parts shop. This is a trading business because they are selling motor parts. Motor repair, again, it's a service business. This is a trading as well. So it has two trading, but still it has one service. Option C is incorrect. So A, B, C are incorrect. Ultimately, you come down to option C, option D. Option D is the correct answer. And just to make sure, it should be all trading businesses. Motor parts, yeah, this is a trading. Petrol, yeah, this is a trading. Used car dealer, yes, this is a trading. In motor parts, they are selling parts. In petrol station, they are selling petrol. In used car dealer, they are selling used cars. So option D is the correct answer for multiple choice 18. Multiple choice 19. What is the purpose of partnership appropriation account? So they are asking for purpose of partnership appropriation account. What is appropriation account? Appropriation account basically tells you the distribution of profit and loss, and it's asking me for the purpose. So I will look at my options. Option A, to avoid disagreements between parties. Yeah, most likely option. I would put this in here in my list of options. Option B, to calculate residual profits for a division between partners. No, that's not right. To calculate, option C, to calculate the profit sharing ratio. This is agreed in partnership agreement, so no. Option C is again incorrect. To determine the amount of partner salary. No, this is again partnership agreement. So option A is the correct answer because it's asking me for the purpose. So the reason why we have appropriation account is to have the record of how profits have been distributed and how losses have been distributed among partners in order to avoid any future fights or disagreement among partners. So answer to multiple choice 19 is option A. Multiple choice number 20. So a partner had a debit balance on his current account of $1,600 on 1st January 2009. So they had a debit balance of 1,600. So partner had a debit balance of 1,600 in his current account. T accounts are always useful. You would see most of the times I'm using T accounts to solve the problem, the calculation problem. I have made the calculations here and the keywords here, the answer here. You can always read these for your references. These are there for your references. And I have put in a lot of effort to write these lines. So I would appreciate if you read them and pay attention to these, because they would be helpful to you at the end. And I assume that you want to score full mark, or closer to 80 or 90% in paper one, because that would help you to to have less burden for paper two, which is not really easy. So let's come back to the problem. Multiple choice number 20. So the partner had a debit balance of 1,600 on 31st December 2009. The following amounts were credited in partner's account or entered in partner's account. So they appear on the credit side because these are capital items, crediting items. Now we need to calculate the closing balance that a partner's account would have. So 4,500 minus 1,600, this would have 2,900. This is carried forward, and this would be brought forward here on 2010. The balance is basically 2,900 credit. Multiple choice 20, the correct answer is option B. Multiple choice number 21. This is basically about club accounting. When you look at the problem, it gives you, it tells you what it is testing you on, basically, or which topic it's testing you on. So it's a sports club which had following assets and liabilities. You need to calculate accumulated fund. Now, what is the accumulated fund? Accumulated fund is very much equivalent to working capital of a normal business, of a trading business, or a service business. These are different types of there are different types of organizations, right? In this case, they are a sports club. They prepare same type of financial statements. It's just that the names are different. So accumulated fund is just the difference between assets minus liabilities. So in this question, you would just spot assets and liabilities and then take the difference. Trade payables, this is a liability. Bank, it's a debit balance, so it's an asset. If this was a credit balance, then it would be a liability. So please make sure you pay attention to all the items, debits and credits. Subscriptions due from members. So these are subscriptions due from members. So this is your asset. Subscriptions prepaid by members. You have received these, but you have not performed the services. So this is a liability because they have paid in advance. Equipment is an asset. Loan to a member. This is a loan to a member. So you have given a loan to a member, which is a capital investment. This is a capital investment. Therefore, it's an asset. I think some students might get confused because they use the word loan in here, and loan is usually a liability, but you need to read it completely. It says loan to a member. So sports club have given a loan to a member. So therefore it's a capital investment, and hence it's an asset. So I have made the calculations here. Total of assets, total of liabilities, you take the difference and you would come up with a number of 11,140. So the correct answer to multiple choice 21 is answer D. Multiple choice number 21. Again, this is about club accounting. So you see 21 club accounting, 22 club accounting. Seems like it was a favorite topic of the examiner in May, June 2010 for paper 1. A sports club was formed on 1st January 2009. During the year ended 31st December 2009. The club purchased an equipment costing 5,000 paying by check. In which of the following club's final account did this appear? So it's basically asking you, there are 3 different types of statements: balance sheet, income and expenditure, receipts and payments. So balance sheet is balance sheet, income and so the purchase of an asset would definitely appear on balance sheet. So it's either option A, either option C, either option D. So option B is clearly not an option, so you can eliminate B. Now you have to decide between A, C, and D. So if you look at option A is only balance sheet. No, it's not necessarily going to appear only on balance sheet. It has to appear on an other statement as well. Income and expenditure will not record this transaction as well, because this is basically income statement, which only deals income statement, which only deals with revenues and expenses. So option D would not be the correct as well. This would be incorrect as too, and option A is incorrect as well. So with this elimination strategy, you just drop down to option C. Even if you don't know the answer by elimination strategy, you drop down to option C. This is what we call educated guess as well. So the correct answer is option C. Receipts and payments account is basically equivalent to cash flow statement of normal trading business. So receipts and payment would also report this withdrawal of $5,000. So in receipts and payment, this would be minus 5,000, and in balance sheet, it would be plus 5,000. So if you see, the accounting equation also balances off. So minus 5,000 plus 5,000, the net effect is 0. Balancing is very important in accounting. And you know, the fundamental accounting equation is assets equal to liabilities plus equity. They have to be in balance always. So option C is the correct answer to multiple choice 22. Multiple choice number 23. Let's read the problem. The capital of business is higher at the end of year 2 than it was at the end of year 1. So year 1, year 2, the capital is higher. Capital is higher or increased. No additional capital has been introduced during the year 2. Now, to increase capital, there are only 2 ways. There are only two ways. One is capital injection, which is basically capital investment, and the other one is net income, increased net income, because net income is reported on balance sheet in the equity section or the capital section of balance sheet. So we would go through the options and see which one is correct. A business had made loss. No, if there was a loss, there would have not been any increase in owner's equity. Option B, the business has made profit. Yeah, that sounds very correct. The business has sold some non-current fixed assets. Now, some of the students might have chosen option C, because by the sale of fixed asset, it provides some revenue, but this does not uh, affect equity. This does not affect equity. It rather reduces the fixed assets amount on the balance sheet. The business has taken a long-term loan. Again, this provides money. But this also increases liability, and does not affect equity. So the correct option for multiple choice 23 is option B. Multiple choice number 24. Barry's sales for his first year of trading were $55,000. So his sales for the first year were $55,000. His gross profit margin was 20%. The closing inventory or stock was 3,200. What were the purchases for the year? Now this is a complex calculation question, but not very complex. If you know the formulas, you just need to churn up some numbers and you would get the answer. I have done the calculation here for your reference. So the first step would be to calculate the gross profit. You calculate the gross profit using the sales and the gross profit margin, and your gross profit is $11,000. How do you calculate gross profit? You calculate gross profit by taking the difference of sales and cost of goods sold. You are given sales, your sales are $55,000. You calculated gross profit, which was $11,000. And you take the difference between 55,000 minus 11,000. You get a cost of goods sold. You get a cost of goods sold. You get a cost of goods sold of 44,000. So this is your COGS. This is your COGS 44. This is your COGS $44,000. Now formula for COGS is opening stock plus purchases minus closing stock. You just need to rearrange this equation, and you would calculate the purchases. You calculated the cost of goods sold 44,000. Closing stock is given to you 3,200. Since it's his first year of trading, there will not be any opening stock. That's why this is 0. So you just add 44,000 plus 3,200. You get the purchases of 47,200, and hence the correct option to multiple choice 24 is, yes, you got it right. Answer D. Multiple choice 25. Which item will not, they have highlighted, this is the keyword, will not appear in the appropriation account of a limited company. Now, what is an appropriation account? It tells you, we are seeing this term again. We have seen this term before, but we are seeing this again. Distribution of profit and losses. And this is asking which will not appear. So debenture interest, yeah, most likely this would not appear because this has nothing to do with appropriation or distribution of profit and loss. Ordinary share dividend, yeah, this would appear. True. Option C, preference share dividend, yeah, this would appear as well. True. Option D, transfer to general reserve, yes, this is true as well. So option A is the correct answer to multiple choice 25. Debenture interest will not appear in the appropriation account of a limited company. It would appear in the income statement because debenture interest is an expense. And if this is also payable, meaning that company has not paid it, it will also show up on the liability section in the balance sheet. But in this case, the correct answer here for multiple choice 25 is option A. Multiple choice 26. How is the factory cost of production calculated? So the key term here is factory cost of production and how this is calculated. Option A, direct material plus direct labor. This is correct, but incomplete. Option B, direct material plus direct labor plus direct expenses. This is correct, but again, incomplete. As I said in multiple choice, you select the best option, Option C, direct material plus direct labor plus direct expenses plus the factory overheads. This seems more complete than the last two options. Option D, direct material plus direct labor plus direct expenses plus total overheads. Now, this is wrong. Total overhead will also include will also include company expenses. So that's wrong because this is asking me about factory cost of production. Factory cost of production. This is the keyword. So option C is more complete and hence the best option. So the answer to multiple choice is option C. Multiple choice 27. This question is very straightforward. Again, easy. Should not take more than I would say 10 seconds, I guess, if you are a very quick reader. So the formula for calculating stock turnover or inventory turnover is COGS over average inventory over average inventory. And how do you calculate average inventory? That is opening inventory plus closing inventory divided by 2. So you would search for such an option. And that's option B. Because option A is incorrect, they use the term less. This is incorrect. Option C and D are incorrect because they use purchases. That's incorrect. So you are left with option B. Option B is the correct answer for multiple choice 27. Multiple choice 28. A sole trader purchased the following items from an office supplier. So a sole trader purchased following items from an office supplier, applying the accounting principle of materiality, which would be recorded as revenue expenditure. Now, this term is there to confuse you. The key term here is this one. Which item from this list are revenue expenditures? Items of revenue expenditure. That is what you have to answer in here. So calculator, yeah, revenue expenditure. Computer system, this is a fixed asset purchased for long-term use. Document shredder, this is revenue. Stapler, this is revenue. So you need to search for these option which includes all these 3 items: calculator, document shredder, and stapler. So no, this is incorrect. B, this is incorrect because it includes computer system. C, calculator, document shredder, stapler, yeah, this is correct. D, computer system, this is incorrect because it has computer system, incorrect. So the correct answer to multiple choice 28 is option C. Multiple choice 29. B. Appa thinks her business will be worth more when she takes on new highly skilled staff. Which accounting principle prevents her from recording this in her balance sheet? So this question is about accounting principle. Topic is accounting principles. And you just need to know the definitions of what each accounting principle means here. Accounting entity, no, this is wrong because this tells you to keep the personal and business accounts separate. Personal and business accounts separate. Accounting period, no, this is about financial period. Option C, going concern, no, this has to do with ongoing operations, ongoing assumption of business. So just by eliminating options, you come to the final answer, and that is the correct answer, option D, money measurement, because this transaction is about measurement. So this business cannot record this entry of highly skilled staff or the goodwill of highly skilled staff because that is not allowed by accounting standards as well. So the correct answer to multiple choice 29 is option D. The last multiple choice for May June 2010, paper 1, variant 2, multiple choice 30. What is the benefit of using information and communication technology, commonly known as ICT, in bookkeeping and accounting? So basically asking you what is the advantage of using technology. Anyone with a computer can access the information. Now this is a basically con or disadvantage. It is cheap to install, not necessary. It depends. There are expensive softwares. Option C, large quantities of information can be stored. Yes, most likely, but we will look at option D as well. Staff requires special training. No, this is con, because staff training incurs cost. Therefore, the correct option here would be option C. Large quantities of information can be stored at a cheaper price. So I have the reasoning here. If you use ICT or technology to do bookkeeping and accounting, you can store large amounts of information at a cheaper rate, and hence that is the benefit. So the correct option to multiple choice 30 is option C. So I would like to just give you a few tips on how to solve or how to attend multiple choice for Principles of Accounting 7110. The first thing is you read the question very carefully. Dates are very important. Pay attention to dates and debits and credits. Then you highlight the keywords. You should always highlight the keywords. What are the keywords in the question? Because they will help you understand the question, help to understand question. And once you have understood the question, you search through the options which are in line with the question requirement and keywords. You can use educated guess if you need to. So thank you very much for watching this video. If this was helpful to you, please help refer these videos to your friend. If you like these videos, please give it a thumbs up and subscribe to my channel. Thank you very much.